Hello, my fellow investors, and welcome to a very special Sunday video. Today, guys, we're going to be doing something a little bit more fun. We're going to be creating a tier list for a few of the tech companies that we like in the technology sector. I had this idea mainly because, well, you know, a few channels like gaming channels, they make tier lists all the time. And actually, Charles Schwab has like a tier list, like, well, I'm gonna say a tier list, but they do give a letter grade to companies. So I figured, you know what don't we do the same for a Sunday video, make it a little bit fun. And with me, I have, because I'm not doing this by myself.
Good evening, everyone. Michael.
And we're gonna be making this tier list, guys. And well, I'm gonna have you specify the criteria in which we are going to rank these companies.
So basically, we're going to be looking at long-term return to the investor. So like, how easy is this? All options on it, its growth potential, like, is it issuing shares, not issuing shares, stuff like that. Just overall, the value of the company in a long-term perspective, like the 10 and 20-year perspective. And we're going to use price a little bit just based on like the PE ratio, just to see if it's like stupidly overvalued and has to come back with an evaluation, or it's at a reasonable area that, okay, well, this is something that can be considered now or maybe considered down the road, and kind of just give you like a feel of what the temperature is of the company, as I would say.
All right. So let's start off with this. And I guess, do you want to start off with, I guess, quote unquote, the easy ones, right? Yeah. Okay. So let's start off with none other than Corva. I'm just messing with you. Let's start off with Apple. So I personally think Apple should go in the S tier. That's just me.
I would argue between A and S. What is Apple's PE right now?
Apple's PE, well, Apple's forward PE is around 32. However, when it comes to the trailing, it is 32.4. So it's pretty much in line. The trailing and the forward are pretty much in line when it comes to that. And again, the current share price is around $190, which is pretty massive, right? It's pretty massive.
It's all-time highs, basically.
It is all-time highs. Right. Here's the thing, though. When it comes to the dividend, they don't really pay out a really big dividend, but they make so much free cash flow. That's why I'm just like, I'm tempted. Actually, when we did this company, I believe that their free cash flow wasn't that good, right? If
I don't remember exactly.
Yeah, I don't remember either. So you know what? I'm actually going to say around an A rank for now, just like you said.
Yeah, and it's mainly due to it needs to pull back. Like, you can theoretically, like, you could buy the company and sell covered calls on it, but then your net gain is gonna be zero because the shares are gonna depreciate while the premium for you appreciates, meaning you collect that premium. And essentially with Apple, it's like, I'd rather have that pullback, let's say, or sell like a put that's a couple months out, have it pull back, and then buy it, the shares on the way down, then sell the cover calls on the way up, or basically just as protection at that point where you're getting a better premium, let's say, for that certain strike, right? So like, if you dollar cost average into it, like to the 168 level, right? Unless your average 175, and Apple, you anything above 175, you're okay to sell that, because even if like you make $1 per share, you're still getting that premium from those calls. So you're not completely out of the woods yet, and then you can just keep rolling it as it goes up, because no stock goes completely up unless you're NVIDIA.
Right. Without having a pullback, and I think the main reason why we're not putting this as the S rank is because of the fact that, again, it's just all-time highs. That's something that I really do not like to see. All right, next one, let's take a look at Microsoft. S rank?
Same. I would argue same story as Apple.
Nah, dude. I've taken a look at Microsoft's fundamentals, and I know this company like the back of my hand. Their fundamentals are top. Like, it's better than Apple, right? Like, it's better than Apple. Like, I don't even think they're all-time highs either, right? I don't
they're
think
at all-time highs.
No, they're not. They're not at all-time highs.
Yeah,
no, they're not. No, they're not. All-time highs is 351.
Yeah, but they're at 337, which is a slight pullback for them.
I guess, actually, is all-time highs 351?
Yes, it is 351.
It is 351.
Their previous all-time highs was 345.
That's what I was thinking. Right. But I mean, even let's take a look at the trailing 12 months PE. That is 36. So it's actually, Apple's is a lot lower. But I don't know. I just, with the dividends by itself, right? With the dividends by itself, they pay out a much bigger dividend. The 5-year growth rate on that dividend is double digits. You know, obviously, is the price a little bit too much right now? Yes, but I think that just the company as a whole, I think this does deserve the S rank. Honestly, like I really, really do.
Fair enough, because it doesn't also have as much of a cult base as Apple does.
Cult base. It's not even about that. Like, it's
roughly
a good
company. Don't get me wrong, but
it's a monster of a company. It's just that like when it comes to the dividend wise, right? Everything else is in line with that of Apple, but the dividend just by itself is bringing it a little bit higher. So I just consider that the S rank.
Yeah, and you could technically consider the recent pullback it had from all-time highs as a pullback, so I'll give you that one.
Yeah, absolutely. All right, so which one would you like to do next?
Let's get NVIDIA out of the way.
Oh, NVIDIA. Where's the quadruple S rank over here?
I would honestly, well, the problem with NVIDIA is if you invest in it at its parabolic move, you're asking for a 50% haircut.
I mean, yeah, for anybody who doesn't know, guys, NVIDIA, the ticker NVDA, has a PE, a trailing 12 months PE of 221. All right, so yeah, this company, we're not saying that it's bad. It's not. The problem is that this meteoric rise that just happened is all because of a potentiality on AI, right? It's nothing that they've ever done, at least with Apple and Microsoft. With these two, we know what they've done, right? We know what they do.
Results.
Right. This whole AI thing is brand new. NVIDIA came out with it being like, yeah, AI is going to do this. Hasn't proved it yet, though. Has not proved it. So that,
I think they said in their earnings statement, AI 118 times. And then
I think it was 181, actually. I think it was 181. Yeah, it was crazy.
Some ridiculous number.
Yeah.
But the thing is, you have them also saying, oh, we're going to make $11 billion in revenue next quarter.
Right.
Which is, they made what, like 8 or 9 the last quarter on the revenue?
Yeah, it was, no, I think it was like around like 7.
7. So you're gonna go, let's see, $4 billion more on revenue. And basically, you're going to go $4 billion more on revenue and then do more revenue than you've ever done any quarter before after having a year of revenue that's a little 22% less than the previous year's time frame. Yeah, no.
And not only that, I mean, we took a look at their earnings. Originally, when we did that live stream, you thought, oh, NVIDIA was going to be doing, and then I showed you the earnings, like the past earnings, and you were like, wait a minute, what just happened here? Like, their earnings are not, like, I'm not saying it's a bad company, but their earnings are not like a Microsoft's, right, or an Apple. It's not. So
you're not pulling out of left field.
Right. And then you're bringing in the speculations of AI. Sure, can it be amazing? Absolutely. But guess what? So was the internet. And look at how many companies went under. So what do you think of this? I would say at around like a C, maybe a D.
I want to say D just because the haircut potential. Like,
oh, yeah. The haircut potential is massive.
I love NVIDIA as a growth, but the haircut potential just makes it so... and it's historic, right? So NVIDIA has that pattern on its chart that shows these massive haircuts where does parabolic move, sells off the 70%. Does parabolic move with a massive earnings gap, that's an $11 billion promise that, again, could it be buy the rumor, sell the news?
Right.
Like, to me, after this earnings, if they hit that, yeah, okay, maybe a C or B tier, but right now it's just...
It's not worth it, man.
You're playing Russian roulette with a 6-chamber gun and four bullets.
Yeah, I agree with that.
You're asking to get shot.
All right, so let's take a look at now. Which one do you want to take a look at now?
Let's stick with semiconductors.
All right, so Broadcom. Guys, Broadcom. I absolutely adore this company. This is the second highest dividend I have ever seen in my life. The first one being BlackRock, all right? A $20 per share in annual dividends, which is just insane, right? Absolutely insane. Broadcom has, I believe, $16.80 in dividends, I believe it is, or $16.40, but it's really, really high up there. Now, the main issue with Broadcom is the fact that, well, NVIDIA said AI, therefore all chip companies rise up again. So that's the main problem. PE, let's see, the forward PE is at 20.11. So that's actually in line with what I like. However, I don't like to look at forward PE. I like to look at trailing PE. And actually, I just took a look at it right now. The trailing PE is 26.49, which is interesting. I believe that I don't remember their cash flows though.
But hypothetically about their cash flows, if they have such a good PE ratio on the trailing and forward, and must have a good cash flow, and their chart history shows that they have pretty good solid returns. Like they're not really very volatile, minus the Nvidia spike that I'm gonna say.
Right.
Like Broadcom has these like runs up, kind of pulls back, runs up, pulls back. It kind of has like this stair step on the way up.
And not only that, guys, this is a company that post or COVID lows was actually $190. And it went all the way up to a high at around like 672, obviously before this current rise. And then it fell to around like $400 after, like $430 after that. So even with that small drop from like, and I say small lightly, that small drop from like 672 down to 430, that's still a massive rise if you did buy this overall at COVID lows, which was at around like $180, $190. So I actually would put this company at around like the B rank.
Hey, I would agree with B rank and I'll differentiate it from Nvidia based on one, when it had its earnings, it wasn't a pure gap. It was actually, it sold off or opened at the low of the gap, pushed up. So it didn't just have like, where overnight it gaps. It had a legitimate, there's no gap to fill. I don't agree with its price currently necessarily. I like to see a pullback, but it's not going to, I don't see the haircut potential that I see with Nvidia, because Nvidia just has this crater based on insanity gap that any bad news will cause you to go down there to fill it.
Right. And on top of that, guys, again, any dividend investor, if this thing were to fall down, that dividend would just be, what was that?
They're just going to buy it up.
They're going to buy it up, and I'm going to be one of them, because an $18.40 in annual dividends, that's just insane. And the 5-year CAGR on that dividend of 23. So absolute insanity. All right, next company, let's take a look at, you said you want to stick with the chips, right?
Yep.
Let's take a look at the most controversial one, Intel.
You're going to leave it right there.
You can just leave it right there.
On the chart.
I really hate to do that. I really hate to do that. You know why? They had so much potential. They really did.
But they're like, this is a prime example of like great company and everything, like from its like theme, I would say, and not even necessarily gonna say fundamentals all the way, but trades like an absolute dog. Like it just has no potential for any bounce, gets sold off. It's like Micron about, I want to say back in 2016, 2017, when they had their like massive drop where they had to restructure a lot. Right now, Intel is one of those companies. It's like, it's just in a rut. It's not going to go BK just because it's tied to the government so much, because I do a lot of government contracting. Like it's the same like Lockheed Martin,
right?
But it trades like a dog. Yeah. It has the, like, if anyone asks me what a classic bear flag pattern looks like, I will literally tell you, go to Intel, pull up the weekly chart. And it is literally like the perfect bear flag. Like perfect flag down, perfect to the side. It's just a perfect flag pattern where it's like, okay, you see this, you run away or you short this,
right? And
it's like one of those, like at $15 a share, yeah, that's where I will be looking at Intel. But until then,
fair point.
No, I'm like, once it gets to those, like, it's so beat up, it's like, okay, well, I'll give it a stab.
And on top of that, they actually recently cut their dividend as well.
And their earnings were negative.
Yeah. So all of that is just, I really hate to do it, guys, but can they bounce back? Yes, but right now it's an F rank, unfortunately. All right, next one. Let's take a look at Qualcomm. I would say this is like a C rank, I would think. Right?
Let's take a look. Their weekly actually doesn't, because they're tied to Apple, so they got a lot with Apple, but their weekly doesn't, like, their graph actually doesn't look too horrible from a charting perspective. They're not. If I had to grade it based off a chart, I would say like an A.
Really?
Because I'm saying A to B. I'm giving that range. because they're downwards trending now, so that gives me some pause there where they could come back to make a lower low, but they have the potential to start carving out a bottom here. So,
and not only that, their dividend is fairly decent, $3.20, a yield of 2.76, a payout ratio of only 28.28, so not too bad. The 5-year growth rate could be a little bit better, but 19 consecutive years of paying out this dividend. So you say B?
I would argue A. I would argue A.
You would argue
because
A. Okay.
Because the ability for you to, it's pretty liquid options, so you can actually sell options that's tied to Apple. So if Apple goes up, it's going to go up. And I think at this point where it's had a nice pullback historically on the graph. So dollar cost averaging, selling puts on it, it actually is at a point where it's reasonable.
Right. Okay, I agree with that. Next, let's take a look at Micron. I forgot who the investor is, but he is the equivalent of Warren Buffett when it comes to India. I forgot who he was, but he absolutely adores this company. Again, I'll probably put a picture of him right now with his name, but he absolutely loves this company. Now, when it comes to Micron, I personally don't understand it. I've tried to understand it, but I cannot. So, what do you think about this company?
Its history is pretty bad in the sense of a chart because it runs up, dumps down, runs up, dumps down. Now it's kind of running up, but it's like it's stalling out. It's trying to get through a lot of that price action. So it could be an interesting one. I don't know how its option chains really are structured right now, just because I think they don't have as much liquidity. If memory serves me right. But it's not like when I compare it to everything else, like if I'm between a B and a C or even a D, where I'm like, okay, is it going to give me more returns than Broadcom? And no, it's not going to give me more returns than Broadcom. So it's automatically like C or D. And then the question is, do I get the haircut that I get with NVIDIA? And right now I don't think I do. So that's why I say C, because I don't see necessarily that massive growth potential, but I don't see that massive haircut potential. It's pretty, I think, because it's chips. So again, it's going to be around for quite some time, and it's having a good, decent pullback. So like between C for now, just because it's an interesting point to get in, but it's not. It doesn't have the conviction yet for me.
So let me add a few more stuff to that as well. Their net income is actually on the decline. In fact, right now in the trailing 12 months is a negative $3 billion when it comes to the net income. The last earnings, everything was in the red. Like all of their the EPSs, they were negative $1.43 for the normalized actual. EPS gap negative $1.73. So yeah, they're all in the red. When it comes to a dividend perspective, it's a tiny yield of 0.76, 46 cents, 0 consecutive years of dividend payment, and a negative payout ratio. That's bad. That's really bad. So I'm looking at this and I'm just like, F. Absolute F.
Yeah, because I'm looking from a chart perspective of what it could do. You're looking at, is there any evidence that it could do it? And what you're finding is there's evidence that there's more haircut potential.
Right. And again, I'm not saying that they probably don't have positive free cash flow or any of that. We haven't taken a look at any of the free cash flows or anything. We're just taking a look at this from like a 20,000 foot view. So when it comes to Micron, I personally believe F. That's just me.
Yeah.
Right.
Fair enough, because we said Intel trades like a dog and Micron trades almost like a dog. But fundamentals are going to make it do it, so it's like same story.
Next, we got HP. Now, we just talked about the equivalent of Warren Buffett. I forgot his name, that he likes Micron. Well, Warren Buffett loves HP. And I don't personally understand why, once again, because I've taken a look at HP, ticker of HPQ. And yeah, it's a company that it's struggling, right? It's a company that is there, but they're not like a major player. So I don't necessarily know what to put when it comes to this one. Now, looking at the dividend, we can see that the dividend is actually not too bad. The current yield of 3.37, annual payout of $1.05, a payout ratio of 29.8, which is actually really good. A 5-year CAGR of this dividend of 13.5, which is massive. 12 consecutive years of dividend payment, if we take a look at their trailing PE, we could see that, well, it's actually 11.81. So it is fairly good right now. It is fairly good. And again, I only know them for their laptops. I don't know if you know them for anything else, Mike. You're more of a tech guy than
printers,
me.
But
printers?
I think they got out of the printer business pretty. Okay. They make their business laptops. Like they serve a lot of like big like companies like mine. Like we have HP. So
we have Lenovo.
A lot of like
we use
Lenovo. It's either Lenovo or HP. It's one or the other.
Yeah. Okay. All right. And you can see here that also on the 1 year, they're down 2.05%. Year to date, they're up a whopping 16. So me personally, this is going to be my opinion. I think this is our first C, because like this is like, it's not bad, but it's also not the worst. It's like barely passing.
I was going to say C as well, just because I do see a head and shoulders on the weekly, but it hasn't necessarily played out yet. And it could have another pullback and come back lower, but I also could see the side of like, hey, it bounced back. The daily pretty much, or I should say the weekly, just has bullish buying going back all the way to like 2016. It never really had like a red the red week per se, like where smart money was really selling this thing off was September of 22 into October 22, but that was like that big sell-off in the market. So it's held pretty strong. Like smart money is basically just buying the company on every dip. So, you know, those guys, they see value in it. Maybe not necessarily right now.
Yeah.
But yeah.
All right. So I guess we're both with that company being a C. All right. Let's take a look at one that a lot of people liked back in I believe the 2000s, and it came crashing down. In fact, if we take a look at here on the max, we can see that this thing had a pretty meteoric rise back in the year 2000, and it's the exact same price as it was, roughly the exact same price as it was back in the year 2000, and that is the company IBM. All right, so this is a company I don't know much about, honestly. Like, you know its name because like it's pretty known across the world, right? But I don't really know what they do.
Yeah.
Yeah, right. It's just, this is what it is. From a PE perspective, if we take a look at the PE, the trailing 12 months PE is a 70.5 PE. So that's interesting. Looking at the actual earnings, they're in the positive. So the revenue missed last quarter by around almost 83 million, but everything else seems to be okay, I guess you could say. The price, at least on the 52-week range, the price is smack in the middle. It's
just sideways up. Like it just travels in a very, very shallow sideways up.
Yeah. And again, guys, this was a company that had a parabolic rise. It actually looks really similar to that of the massive parabolic rises we've seen recently. In the year 2000, it went to a high as like what, 120, 130, and around. No, look at that. 23 years later, we're roughly at that same price. So that's absolutely insane. So what would you put this company at, honestly? I'm thinking of like a D rank.
I would argue just because it's going sideways up, there's a lot of option strategies you can play with it. And
I don't even know what they do. But do you know what they do?
For me, it doesn't matter necessarily what they do because I'm basing it purely off like what the charts are telling me, and it's basically sideways up consistently or sideways, which Iron Condor, Paradise, and you can sell the calls or you can sell the puts depending which way you want to go. So you can make put premiums. It doesn't have necessarily like the appreciation of like the S, A, or B tier, but like C, it's where it's like I see you can make money from it.
Yeah, I would argue like a C minus. I would say. All right. So sticking with that whole trend, let's take a look at another one now that had a massive parabolic rise in the year 2000, and that is the company Cisco. Guys, Cisco if you take a look at have you taken a look at Cisco on the year before? You have, right?
Yeah.
Guys, I'll probably put a picture of it right here. That is
.com bubble.
That's a massive .com bubble stock. It went as high as like what, $80? More than that, $74, $75 back in the year 2000. Current price, guys, 51. 52-week high right now, $52.56. So it actually hasn't gotten as high as the 2000 parabolic rise at all. Like in these past 23 years, it has not gotten that. I believe the highest, it was around like what, $62 or so. That's insane. Now, when it comes to a dividend perspective, this company is actually not looking too bad. Current yield of 3.06, so above the average. Payout ratio of 43 almost, which is okay. A 5-year CAGR, the 5-year CAGR could be a little bit better. 4.43, 11 consecutive years of dividend payment. Looking at the trailing PE, we can see that it is 18.33. So where would you put this company at?
So if I look at it from a massive time perspective, it's almost like a massive cup and handle pattern, which is pretty bullish. Yeah. What I didn't like necessarily is that it sold off the second it got to new all-time highs. Surpassing the dot-com bubble era. And
it didn't though.
It did.
Oh, it did.
Dot-com peak was right around $56, and the $60 was new all-time high.
That's not what I'm seeing here, my dude. I got April 3rd, 2000, $74.94.
It doesn't register here then.
No, okay. Well, I'm okay. So yeah, I'm looking at this on the it's saying $74. That's why I say like 75 being the 52-week high, or at least all-time highs when it comes to this, and it was on April 3rd, 2000. So roughly. So I would say around 75.
It could be a stock split that's causing it to show one way or another, but
I don't believe it has a stock split, but yeah. Okay.
Yeah, it came close. Let's just say it came close. But the thing is, like, looking at it, it's not necessarily like it's okay on the chart perspective. Like, you're kind of bouncing in between an area right now, going sideways up. So you have potential to the downside, you have potential to the upside. So you have to see how it all plays out. But to me, I want to say like a C.
That's interesting, because I was going to say it like around like a no, yeah. I would say a C. I would say a C as well. Yeah, I was gonna say a B, but I'm like, that is not at the same level as Broadcom. This is no way.
Yeah, because we're judging it based on returns.
Right.
Like C is that kind of middle ground of like, you don't know. Like it has one like
it has potential.
There's like
right. Okay.
It has potential to go one way or potential to absolutely bomb you. Yeah,
it's like within the past 23 years, it's gone nowhere. So it's just like, yeah, it's making good money. It's gone nowhere. So it is what it is. All right, now let's take a look at the last four, and none of these pay out a dividend. I guess we'll start off with the one that we know the most, and that is Adobe. So what do you think about Adobe, good sir?
I think it's fundamentally going to be around for forever because it's integrated into so many things. It had a big bubble with COVID. That's all. So it's going to take a little bit of time to recover from that, but it's had a nice consolidation bouncing out of it. Would I be buying it right now? No, and I'm curious what its PE is.
Well, let's hang on a minute. It's funny you mentioned COVID. This thing reached an all-time high of around almost $700. I'm looking at it right now, $687.49. November 29th, 2021. Current price of what, $485? This already had the pullback. The pullback was to go down to around $275. Yeah. Yep. $275. So it already had a pretty massive pullback. And the current correction. You're right. And the current PE, the forward, is 30.86. Looking at the trailing one, though, this one it is 46.34. So the funny thing about Adobe is that if you take a look at their fundamentals, I do remember their fundamentals pretty well. This is like a monster of a company. Like, their fundamentals are like top tier. Like, I'm not joking. Like, it's really, really good. It's really, really good. Now, they've recently went into the whole AI images kind of thing, which actually a lot of people are criticizing them for it because it's actually not as good as, you know, smaller companies. And yet people are like, you're a multi-billion-dollar company. Like, what's wrong with you? Why can't you make good AI images? So I don't necessarily know where they're going with that, but maybe they have like liabilities in the sense of like copyright infringements if they do make it good or something. I don't know, right? I don't know. But nonetheless, though, I think that this is a company that has had a massive pullback. It doesn't pay out the dividend, but this is not a company you buy for its dividend. It's had a massive pullback recently, right? Recently, the pullback was as of almost about a year ago. So you had the opportunity to buy it, you know, sub 300. I think this is a company that honestly, I think this is an S, or either an A or an S.
I was gonna argue A, just because like it's had a pretty big move recently. I like a little pullback, and the P is a little bit on the, like, comparing it to like Microsoft and Apple, like it's a little higher than theirs, but like you said, it has a lot of potential to the upside.
And not to mention as well, it's software, right? Software is a lot easier to do than like chips, right? Than hardware stuff.
Physical infrastructure.
Right. It's always a lot easier to do. So that's why I'm like S, because Microsoft also does a lot of software. So I'm like S or A.
I would argue A, just because
Okay.
you're not showing the strength of Apple and Microsoft.
Okay. Well, I mean, Apple is an A though, but
yeah, but
I get
Apple
what you
has
mean
other
there.
things going for it.
That's true. I mean, the only reason why we put Apple in the A is because of their rise recently. So it was because of their price. So, all right. Next, we got Salesforce CRM. Do you use this in the company you work for, Mike?
I haven't heard about this company in a very long time. So
But you have heard of it,
or I don't know if we do.
Okay. Because in the previous company I worked for, they used Salesforce a lot. It's basically like how can I say this? It's basically like a way to organize stuff in like the company.
So it's like SAP.
Yeah, well, no, it's not to archive things. It's more along the lines of like to make like purchase orders, to like do that kind of stuff. You get me?
No, we're old school with Excel.
No, we're old school with Excel. Yeah. So let me actually read you their a little bit of their company profile. We got Salesforce Inc. provides customer relationship management, CRM, technology that brings companies and customers together worldwide. The company's service includes sales store data, monitor leads and progress, forecast opportunities, gains insights through analytics and relationship intelligence, and delivers quotes, contracts, and invoices. Yeah, that's essentially what they do. Now, they don't pay out a dividend, which, again, none of these do. I think Corvo actually does, but I'm not fully certain. Now, when it comes to their PE, let's take a look at their trailing 12 months PE. It is 552. So that's the trailing 12 months, Mike. What do you think about that? Yeah,
I think it's going to be sitting next to Intel.
It's sitting next to Intel. The forward, though, look at that. That's absolutely crazy. The trailing 12 months PE is 552. The forward is 28. Yeah, I'm just like, what? That makes absolutely no sense. So on the 1 year, they're up 18.65. Year to date, they're up 55.5%. So their all-time highs, when was their all-time highs actually? Let's take a look at this. Their all-time highs, they've actually had a pullback. Their all-time highs was in November 8th, 2021, $306.65. So right now they're at 209. So they've had a nice pullback recently as of the end of last year, actually. $128. So I don't know.
But
yeah, go on.
But to me, it's like it had a pullback, had a bounce, and then like, you're not creating a lot of price structure through here. So like you didn't really consolidate. You just kind of went down, went up. So these straight moves, they can be retraced pretty easily. So I would like to see the company come back or show through its earnings and its price that it can hold a relatively okay PE at a certain price, right? So if your earnings are increasing and then, hey, your price is about the same, then okay, that shows better potential. But right now, it's just all over the place.
I agree with that statement. So where do you want to put it? I wouldn't say F. I would say that around like a D. Yeah, I would say around like a D. All right. Next, we got the company Corvo. So you do not know this company. And the reason why I wanted to include it is because I've actually done this company twice on the channel. And when you first look at it, you're like, oh, this is probably some like stupid thing, right? Like you don't know it, right? It's not like a brand name, I guess you could say. And you're probably like, oh, they're probably so. Actually, their fundamentals are really good. Like really good. So what they do, here's their company profile. Corvo Inc. engages in development and commercialization of technology products for wireless, wired, and power markets. It operates through three segments: High Performance Analog, HPA, Connectivity Sensors Group, CSG, and Advanced Cellular Group, ACG. So they mainly focus on wireless stuff, wireless products, essentially.
Yeah.
And they're actually, what year do you think they were founded in? You think like 2000s, right?
Old.
They're old. Yeah, they're old. 1957. 1957. Yeah. So they've been around, right? They've been around. And they're actually in Greensboro, North Carolina. So that's just, yeah. So let's say, I don't remember. Yeah, okay. So they do not pay out a dividend. When it comes to their earnings, their EPS normalized actual came in at a positive 26 cents. However, their GAAP, negative $1.39. But their revenue, $632.7 million, beat by $11.35 million. So I don't necessarily know what to put at this. All I'm going to tell you is that, man, I've taken a look at their fundamentals, and the first time I looked at it, like, I was surprised. I was very much surprised. So, yeah. So what do you think about this company? Oh, yeah, and the let me actually tell you the trailing 12 months PE.
Probably something ridiculous.
100.
It's not as bad as I thought it was going to be.
So what do you think about, like, what do you think about what you're looking at it from your charts?
From the technical perspective, it's same like we just went with Salesforce, big bubble, and then kind of drop, but it's consolidating sideways. So it gives me a little concern because it's like the traditional bear flag pattern on the weekly, so it gives me a little pause to it. But if it starts kind of going sideways for basically the rest of this year into next year, then I'd basically be saying, okay, like you've invalidated that, like you're not going to get the big drop, let's say. So I almost want to put it in like C because it has potential, but I don't know necessarily where it's going to go.
I would actually argue B, because I've seen their fundamentals, but I wish there was like a C plus. Guys, core vote to me is a C plus, so let's keep it as a C, right? But it's like a C plus. It's maybe like a from a percentage grade, I would say maybe like 78-79%.
Yeah.
Yep. All right. And the last one, we got Enphase. Oh boy. Oh boy. Oh boy. Oh boy. Oh boy. We got the ticker for ENPH. Mike, this company. Oh boy. Major hype. Especially as of actually last year alone, reaching a peak of $339.92. So almost $340 as of last year. Currently, when it comes to their earnings are in the positive, $1.37 for the normalized actual, and the gap it is at $1.02. Revenue of $726.02 million, beat by $2.85 million. If we take a look at the trailing PE, the PE, this is massive. Actually, it's not. Okay, never mind. I thought it was 49. All right, it's a 49.08 PE. So, what do you think about this? Because it's had a pretty massive drop recently.
It's pretty much in a broadening wedge, which is pretty bearish, and I don't like that it's on a massive time scale. Like it makes a new all-time high and then it just crashes right down. Right. So it's not holding that value. It's basically people are saying, okay, got my check, bye. Like they're not holding the company, and like that should tell you something. People aren't willing to hold the risk.
Right.
And to me, if you can't hold that risk, it's automatically putting you down into like the D and the Fs, because I have no guarantee on my return on investment. I have no guarantee that in 5 to 10 years, I'm not going to be underwater on this. Right. Whereas like a Broadcom, an Apple, Qualcomm, Adobe, Microsoft, I can easily say that. I can easily put $100 in it. I know in 20 years, it's going to be more than it is now.
Right. Okay. So what do you think? I would D or F? I wouldn't say F. I wouldn't say F. I personally would not say F. Though their net income has been pretty flat, as all except for just December or 2022. It's been pretty flat overall except for December 2022. And when it comes into their free cash flow, it's in the positive, and it has been increasing. So yeah, that's what I'm saying. I would say around like a D.
I could go either way, D or F. I lean more towards F just because of the chart. But then again, if there's something on the fundamental side that's showing maybe a better, and their P is not terrible, so
I just like the fact that they dropped massively. Actually, this might be one that I may want to do a discounted free cash flow just to see if after that massive drop it's the buy, because we are at near 52-week lows. So Alright guys, well that pretty much does it for this video. Here is our final list. Microsoft as an S, Apple, QCOM, Adobe A, Broadcom B, HP, IBM, Cisco and Qorvo C, Nvidia, Salesforce and Enphase a D, Intel and Micron at an F, and I'm actually going to put Charles Schwab's grades in addition to what we got here to see how it actually compares, right? So you'll see that right here. I'll do it in editing, and yeah, I think that'll pretty much do it for this video. Obviously, we didn't take a look at the free cash flow. We didn't do any of that. This was more of just like a fun thing, right? Just giving our opinion, just looking at like basic things when it comes to investing. So that pretty much does it for this video. Hopefully everybody liked. Do you have any last words?
No, just let us know what you guys think of the new video style or this type of video in the comments. If you want us to do more, what you might want to change, what you might want to see, just give us your thoughts.
Yeah, my idea was to make Sundays like a fun video, right? Nothing, just to start off the week, just like a fun video. So figured this was kind of interesting. So that will pretty much do it for this episode, guys. Like if you like, comment, subscribe. It really does help here with the algorithm on YouTube as well as Rumble. So y'all can follow us on Rumble too. Link is in the description below. With that said, peace out, and we'll see you all next time.